So you mentioned you got into mining like pretty early. So were you mining with and explain it if you would a little bit. But like, were you mining with ASICs at that point, or were you still on GPUs or CPUs? What were you using?
Yeah, I started with GPUs. I actually built my own rigs. Didn't really think it through. I built them out of wood, but I was just kind of just doing it from scratch and having fun with it. I built home computers before, so I had a general idea of what I was doing. And I advise everybody to go ahead and pick up a hobby miner. You're not going to make money, but the value of what you learn through going through the process will be so much more than what it cost you to buy the miner and to hook it up and to run it. And mainly what I'm talking about is producer economics. Earlier I mentioned I was mining through the first halving, and that kind of like shell shocked me. Well, Bitcoin mining is a lot like any other production business. Matter of fact, Bitcoin is the lowest risk, highest reward commodity to produce in the world. And the reason that is the business logic that goes behind it. So any producer or any entrepreneur who's looking at the market, the number one thing they're depending on is the free market price discovery signal. And that's a supply demand equilibrium. And what you're looking for are profit margins, right? I mean, you go and you make a water bottle, or you produce a car part, or you produce electrical components because there's profit in it, right? Profit drives business, profit drives innovation. That is the free market signal. It's a profit signal to entrepreneurs to get involved in the business. And that's what Bitcoin price does. Bitcoin price drives the Bitcoin network, and it brings more producers to the network. And as it brings more producers to the network, Satoshi built into the algorithm what's called the difficulty adjustment. So it's really the only commodity in the world that when more people start producing it, it becomes harder to produce. That's what the difficulty adjustment does. It increases the difficulty to produce a Bitcoin. Well, when you increase the difficulty to produce a Bitcoin, you increase the cost to produce a Bitcoin. And what happens is the cost of generating a Bitcoin gets driven towards the price. And Satoshi described this as a commodity cycle. He said all commodities price tend to gravitate toward its cost of production. So there'll be times when the market price trades at a discount, like it has been recently, to the fair value or to the cost of production or natural asset value. You can define it however you want, whatever makes it easier to understand in your head. But that natural asset value doesn't have to equal the price. The point is when the price is different from the natural asset value, we finally get to answer the question, is Bitcoin cheap or is Bitcoin expensive? And obviously, you want to be buying Bitcoin when it's cheap or at a discount. And well, I don't really feel comfortable saying you want to sell Bitcoin, but if for some reason you are forced to sell Bitcoin, you'd want to do it you wouldn't do it after FTX collapses and it's selling at a huge discount for its natural asset value. You would do it in the middle of a bull run when you know you're getting a premium to that natural value. So simple
So
concepts like that.
yeah, so in most simplest terms, you're describing the essentially the value or the price of Bitcoin is undervalued or overvalued, dependent on the cost to produce a Bitcoin.
Relevant to its
Yeah,
cost.
relevant to the cost of to producing a Bitcoin.
I like
Um,
to compare it to like a house because everybody needs a house. It's in our hierarchy of needs. We need that place to put a roof over our heads. Well, if you know that the person that's building your house is building it for $1 million and then they're going to charge you $10 million for it. Whoa, wait a second. Am I getting ripped off here? How much of a premium am I paying to the cost of production and labor? What? It makes you ask the question like, this seems too expensive. Well, it is. And price is never going to be the cost of production. It's always price relative to cost of
mhm.
production. So anybody who is an investor, in real estate, when they call it the replacement cost, right? So when a house starts to go close to its replacement cost, which typically happens in foreclosure type events, then those things get bought up really quick because they know, man, even if I had a builder and a contractor and I had access to all these materials and I could source them all and I could build this house, it would still cost me more to do it myself, even with all those connections, versus just buying this house straight up because it's in foreclosure. So the cost of production for astute investors really forms a baseline or what I like to call the natural asset value. And I do get some kickback on this, so I do want to dive a little deeper, because there's probably some listeners there that are saying, well, if I dig a hole in my backyard and it costs me $100 to dig the hole's not worth anything. Yeah, we know. In order for the cost of production to be a baseline for natural asset value,
there's got to be demand.
Yeah, there has to be demand. Absolutely. And the base layer of demand for Bitcoin is growing exponentially. I believe it's growing faster than the internet did. So we're seeing a really large base layer of demand grow exponentially. We're seeing the largest base layer of demand, which is currently on the US dollar, start to be chipped away at. And that doesn't mean it's going to disappear overnight, but it does mean that the supply of dollars are going to continue to go up against a lowering demand, which means the price is going to go down always. So we need to be prepared for that as we move into the future.